Good day Forex trader. Your USD Forex signal, ECB and Fed divergence signal weakness. The pair will likely keep falling in the near term as investors price in a divergence between the Fed and the ECB. Bearish view. Sell the Euro USD and set a take profit at 1.1200. Add a stop loss at 1.1350. Time frame, 1 to 2 days. Bullish view. Set a buy stop at 1.1300 and a take profit at 1.1400. Add a stop loss at 1.1200. The Euro USD pair tumbled to the lowest level in more than a year as the US dollar continued its bullish momentum. The pair also crashed after some European countries announced new COVID restrictions as the number of cases rise. It is trading at 1.1280, which is slightly above last week's low of 1.1250. Eurozone's new COVID wave. The Eurozone is experiencing a new wave of the COVID-19 pandemic. In the past few weeks, the number of countries announcing more cases has increased. They include countries like Spain, Netherlands, Germany, and Austria. Last Friday, Austria announced that it will enforce mandatory vaccinations. Most importantly, the country announced that it will impose a new lockdown in a bid to control the illness. This announcement led to protests during the weekend. In a statement, a German minister said that the country will be forced to add new restrictions to prevent the spread. He did not clarify whether these restrictions will be national or regional. Similarly, more countries are considering adding these lockdowns. Therefore, there is a likelihood that the Eurozone's economy will struggle even as the US does well. Most importantly, there is a likelihood that the European Central Bank will be left behind as other central banks tighten. Indeed, in a statement last week, Christine Lagarde said that it was unlikely that the ECB will hike interest rates in the coming year. With cases rising, there is also a likelihood that the bank will slow down the pace of quantitative easing tapering. Still, analysts believe that Europe will deal with the new wave better than before because of the rising number of vaccinations. Meanwhile, recent data from the United States signal that the Federal Reserve will continue tapering and even hike interest rates earlier than expected. Euro USD forecast. On the 4-hour chart, we see that the Euro USD pair has been in a strong bearish trend lately. As part of this sell-off, the pair managed to move below the key support at 1.1530, where it struggled to move below a few times in September and October. The pair's decline is also being supported by the 25-day and 50-day moving averages, while the stochastic oscillator has moved from the oversold level. Therefore, the pair will likely keep falling in the near term as investors price in a divergence between the Fed and the ECB. This could see it drop to 1.1200. Gbp Usd Forex signal, sterling prepares for a drop to 1.3350. The pair will likely break out lower since a bearish flag is usually a sign of bearish continuation. Bearish view. Sell the Gbp Usd pair and set a take profit at 1.3350. Add a stop loss at 1.3520. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3500 and a take profit at 1.3600. Add a stop loss at 1.3400. The Gbp Usd pair has been in a tight range in the past few weeks as investors reflect on the potential convergence between the Fed and the Bank of England, BoE. The pair is trading at 1.3445, where it has been in the past few days. BoE and Fed convergence. The UK and the US economies are doing relatively well, meaning that the Fed and the Bank of England, BoE, could be incentivized to tighten. This explains why the British pound has been relatively steady compared to other currencies like the euro, Australian dollar, Japanese yen, and Swiss franc. For example, the UK published relatively strong economic numbers last week. On Tuesday, the Office of National Statistics, ONS, published relatively strong employment data. These numbers showed that the country's unemployment rate declined to a pandemic-era low of 4.4%. The following day, the ONS published strong inflation numbers. These numbers revealed that the country's headline consumer price index, CPI, rose to 4.2%. This was the highest level it has been in more than a decade. It was also better than the median estimates. On Friday, the agency showed that the country's retail sales did well in October as buyers started buying early for the Christmas season. Therefore, there is a possibility that the Bank of England will adopt a relatively hawkish policy when it meets in the coming month. The same can be said about the United States, where numbers have been relatively strong. Inflation has jumped sharply in the past few months and is currently at the highest level in more than 30 years. At the same time, the unemployment rate has dropped while retail sales and home prices have done well. Therefore, the Gbp USD has moved sideways as investors assess the stand of the Fed and Bank of England. Gbp Usd Forecast. The 4-hour chart shows that the Gbp USD has been in a relatively bullish trend recently, even as other currency pairs like the Euro USD and Aud USD slip. The pair is trading at 1.3445, which is at the same level as the 25-day and 50-day moving averages. It has also formed what looks like a bearish flag pattern that is shown in black. Therefore, the pair will likely break out lower since a bearish flag is usually a sign of bearish continuation. If this happens, the next reference level will be at this month's low at 1.3352. Aud USD Forex signal, bears still in control for now. The pair will likely continue falling this week as bears target the September low at 0.7165. Bearish view. Sell the Aud USD and add a take profit at 0.7165. Add a stop loss at 0.7300. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7250 and a take profit at 0.7350. Add a stop loss at 0.7150. The Aud USD tumbled to the lowest level since October this year as concerns of a relatively hawkish Federal Reserve remained. The pair is trading at 0.7230, which was the lowest level since October 6. It has dropped by more than 4% from the highest point this month. Fed and RBA divergence. The Aud USD pair has tumbled mostly because of the relatively strong US dollar. In the past few weeks, the dollar has surged as investors reflect on the strong economic data from the US. As a recap, data published this month showed that the US added more than 543,000 jobs in October. In the same period, the unemployment rate declined to 4.6% while wages rose by 4.9%. Meanwhile, additional data showed that the country's inflation surged to the highest level in more than 30 years. At the same time, retail sales defied odds and surged in October. Therefore, these numbers signal that the Federal Reserve will continue with its tightening policies. Elsewhere, in Australia, recent data has painted of an economy that is making a comeback after going through a rough patch a few months ago. The country's labor market has done well while inflation and retail sales have also bounced back. Most importantly, Australian home prices have jumped to the highest level on record. Unlike the Federal Reserve, the RBA has maintained a relatively dovish stance. In its recent minutes, the bank signaled that it will hike interest rates in 2024. That announcement caught investors by a surprise since most of them expected the bank to hike rates sooner. This week, the AUD-USD pair will react mostly to economic numbers from the US. The US government will publish the important housing statistics that are expected to show that the sector did well. The US will also publish durable goods orders and GDP data. AUD-USD Forecast. The 4-hour chart shows that the AUD-USD pair has been in a major bearish trend lately. The pair has even managed to move below the 78.6% Fibonacci retracement level. Additionally, it has moved below the 25-day and 50-day moving averages while the money flow index, MFI, has started forming a bullish divergence pattern. Therefore, the pair will likely continue falling this week as bears target the September low at 0.7165. On the flip side, a move above the key resistance at 0.7300 will invalidate this view.